Micron was reporting numbers, and analysts had been expecting a forecast of about $5.9 billion in revenue. Instead, the company actually forecast $6.4 to $6.8 billion in revenue. And this is a big deal because the memory chip market, where Micron operates along with Samsung and Hynix, has been in a bit of a slump for a while, a number of quarters where people have been expecting this kind of turnaround. It just hasn't come. And that's largely because their traditional markets, which are smartphones and PCs, have been in a bit of a slump. But what Micron did to kind of surprise investors is they talked about how they're benefiting from AI demand right now and how they expect that to help them in the future. So they put out this forecast, and as you mentioned, the CEO, Sanjay Mehrotra, said that they are expecting to benefit quite a bit as AI demand ramps up, and that's happening right now. We're seeing corporations in particular, like OpenAI, Microsoft, et cetera, are investing a lot of money in all kinds of semiconductors to be able to power this research into artificial intelligence.
Does this lend broader optimism for the chips market?
Definitely, and you're seeing it here in Asia. Hynix is definitely benefiting. Hynix is another big player in this AI-related chip called HBM, or high bandwidth memory, which has really been taking off because you pair it with NVIDIA chips. NVIDIA, of course, is the most valuable chip company in the world right now, more than a couple $1 trillion. Because you pair these HBM chips from Hynix and Micron with the NVIDIA chips, there's been very, very strong demand. So you're seeing Hynix shares up quite a bit this morning. Samsung shares are up too. I think you mentioned Micron shares traded up about 15% in aftermarket trading in the US. So you're seeing this general optimism around how the chip sector, which had been in a bit of a slump, especially on the memory side, is now coming back.
And Peter, there's always the geopolitical cross currents, and overnight we also had that news that the US could expand sanctions against Huawei. So really it's just trying to limit their ambitions.
Right. This is a bit of a challenge for the chips industry, and it also does present some opportunities. Of course, the U.S. and China have been squaring off over many different things on the political front. In the technology industry, they've really been focused on the chip industry because that's kind of the foundation for everything that you want to develop, including, say, sophisticated military weapons, in addition to artificial intelligence and these technologies that you can use in a number of different ways. So what sources told us is that the U.S. is now ready for a new round of blacklisting against companies really related to Huawei, the big telecom company that has been at the core of China's technology development. The U.S. may decide to blacklist a number of companies that are helping with them with some of their development, including a company called Swasher and PST and perhaps Sea Carrier too. So we may see that blacklisting. Why does that create opportunities? Is because we're seeing this fracturing of the tech supply chain. You need to build up capacity in a number of different places. That's happening in the U.S. We just heard that the U.S. could give Intel, for example, as much as $20 billion in incentives to build domestic chips. You're seeing it here in Japan. You're seeing more of it in Taiwan and South Korea too. So there are opportunities amid these geopolitical tensions.